So here we go. Hello, 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 and welcome to yet another episode of Guts, Glory, and Story by Alok and Sangram, where every week we interview industry leaders who are rule makers for their domains. Last week we saw how we had oodles of optimism coming from Deepak Bagla, who gave us several reasons to be optimistic about India. The MSME recovery was strong. Not just that, micro organizations showed that 90% of them paid their dues without waiting for any kind of government aid. And here we are with today's session, trying to discover how smart brands are finding their COVID niches. Not just that, you have a lot to look forward to. We've just started COVID Tales, our blog, which has stories of regular people like you and me sharing anecdotes and experiences about how they are tackling and fighting COVID. So if you have a COVID tale to tell, do write to us and we'll be very happy to cover your story as well. But before that, for those of you who are tuning in for the first time, here's a little bit about us, Alok and me. I am Sangram Surve. I head the Think Why Not group. I'm an ad man, entrepreneur, and a filmmaker. And with me is my co-host, Alok, serial CEO, investor, entrepreneur, and now author. He's authored the book, Achieving Successful Business Outcomes with Taylor and Francis, a global publisher. His book is a relevant solution for the times of today. But before that, let me tell you how the evening's going to pan out. Alok and me have a lot of questions for Kanwal. We spent the first half an hour doing that. After that, when we filled your registration forms, we had written down a lot of questions. We got 374 questions from all of you. We've handpicked only a few of them. We'll tackle those. And after that, we'll throw the dice open for all your questions. And in the remaining time, Kanwal will try and answer those. And now, let us welcome the man of the evening, the man with the golden touch, the Midas touch, Kanwal Singh, MD, and CEO of Fireside Ventures, but a detailed formal introduction will be done by my co-host, Alok. Over to you, Alok.
Thanks, Sangram. Good evening, ladies and gentlemen, and please welcome Kanwal Singh, Managing Partner of Fireside Ventures to Guts, Glory, and Story. Fireside Ventures is also synonymous with extremely high rate of successful investments in both ventures and startups. And today, when a large number of startups are strapped for cash or are downsizing their operations to conserve cash, we will have Kanwal tell us why it is the absolute opposite for his portfolio of companies. We will also try and understand Kanwal's investment thesis, something extremely different from most PEs, as his focus has always been both unit economics as well as revenue growth. And it's not just the latter or for the sake of valuation. But first, we will begin with his personal journey of continuous pivots. Ladies and gentlemen, you'll be surprised. And that has helped him to find his purpose today, which is, Kanwal, to help transform startups. Ladies and gentlemen, presenting our power speaker for today, speaking on the future of startups and building of local brands in India. By the way, also my engineering college classmate and buddy, Kanwal Singh.
Thank you.
Kanwal, welcome to this show.
Thank you so much.
Over to you, Sangram.
So Kanwal, the first question is to ask you on your very unorthodox journey. Levers to Intel, to Helion, and now Fireside. And when the trend was for tech startups, here you take the road less traveled and you decide to incubate consumer brands. Tell us about this exciting journey of yours.
Sure. So actually, there's nothing, thought through or planned. I would call it a lot of serendipitous steps, which in, hindsight start looking quite interesting. Let me start from my engineering college because Alok referred to that. Did my engineering from Punjab Engineering College. I see a lot of colleagues, batchmates on the on the participant list today. Decided to do an MBA straight from college, and which was actually, I think, the norm at that point of time, because now most students, most kids will want to get some work experience and understand what their motivations are. I mean, we were just following copybook. So engineer, MBA, and then joined Hindustan Lever. And, that was a typical first day, first company that comes to interview and, big brand and everything. So I had a fantastic 10 years in just understanding the business of brands. So I guess, you can call it first love, you can call it, that was really the inspiration for everything else that I'm, now getting involved in. At a point of time, started seeing this whole wave of technology in the late 90s, early 2000s. And the intrigue was, how is technology going to affect how we live our day-to-day lives? So, everybody knows, but I'm not really a practicing engineer or a technologist, so don't have any claims of understanding the nuts and bolts of technology. But certainly, the application of technology to the everyday life was the exciting part. Got an interesting offer from Intel to join them, and it was quite intriguing because why would they want a guy who was selling tea and soaps and all kinds of consumer products to come and head marketing for them for South Asia? But Intel had a very interesting logic. So they had just introduced their Pentium MMX, and they were really building a consumer PC story. And my then boss told me, he says, our problem is we have 100% share of a 0% market. So there is nobody buying computers for home, but whoever buys is buying, a computer with an Intel chip. So they wanted to actually expand the market, and they said only can be done if we get somebody who brings in a consumer mindset, who brings in a understanding of how do you build a consumer business or a consumer brand, and not necessarily we have enough people who understand, the architecture and how chips work and how they influence it. So that was a very interesting, almost like a segue for this convergence of how technology can influence everyday life. So I joined Intel from Levers, spent about 3 years there, really enjoyed the experience of, transforming a business which was really run by engineers and technologists into a more consumer mindset. Quite fascinating. I mean, that's a story for another day and another hour probably. Reached a point where, I was feeling quite excited about this whole new thing called internet. And we were starting to see, this was the time when Naukri.com, Make My Trip, some of those very early, and several others which obviously don't exist today. And I was, very intrigued by saying, listen, I am powering the back end of the internet, so the semiconductor, the computers, the infrastructure. But the real fun is on the front end, how are you creating businesses on internet using that infrastructure? So really, got excited about, doing something entrepreneurial. Tried a few ideas, registered a few domain names. Nothing really, started to, feel like it was so exciting that I should jump and do it tomorrow morning. And then discovered that, there was this new concept called venture capital, which was hitting the country. Again, this is early 2000s. And very exciting, time for not only investing in, but working with entrepreneurs. So that triggered, some kind of interest in looking at. So I was always keen more on, how do you work with entrepreneurs, how you help build businesses. So last 20 years that I've been doing this, the motivation has always been, being part of the entrepreneurial journey, as much as being an investor and obviously, the other aspects which are attached to that. Got an opportunity to join a large private equity group called Carlyle. And I guess learned the ropes of investing through the Carlyle network, very large global player, and I'm sure all of you know about them. But the itch was to do something, slightly more entrepreneurial. So at some point in 2005, decided to quit, and I teamed up with two other partners and started this fund called Helion. So Helion was a classic early stage technology venture fund. We started doing a lot of interesting stuff. Spent 10 years there, saw some really almost seminal changes happening in the consumer brand space in the early 2010s all the way up to 13, 14. And something triggered in me to, take one final plunge into, what I call the first love, is saying, is there an opportunity to actually, be an investor in consumer brands? And that's how the fireside journey began. So let me pause there. I think I've spent a lot of time talking about my background. Happy to move forward on the fireside story and what we are doing.
Very interesting. And just for the viewers, Kanwal was with an investment company called Hack India. And just for a very short while, and I joined them. So we missed each other, but I joined them. But Kanwal, I think the more interesting and the real interesting part is how you created brands in India, in a place where brands, I mean, let's face it, the levers have the brand, right? Or people of that stature you've created brands, right? But before I go into the question to ask you, the viewers know that we normally conduct a very quick poll to get their view before I ask the same question to you. So viewers, this is for you. And Shweta, can you do the first poll question? This relates to buyer behavior and directly connects to what Kanwal would be talking. So viewers, the poll question will pop on your screens and you will have 30 seconds to answer, and we'll publish the results immediately. I have a very similar question for Kanwal, and let's see how close you are to them, okay? Which out of the 4 you are most mindful of when you order for ready-made food? This is when it is being delivered to you. So packaging, contactless, brands that you trust, or price. Where do you think it is the most critical one? So yeah, it's moving. And we've got about 20% telling, 12% telling packaging, about 5 contactless, 6% price, but 76% telling us that it is the brand that they trust. So it is, sorry, why am I getting confused? Okay, fine. It is the brand that they trust, right? So Kanwal, and this is an interesting one. You and I, we spoke about it about a month and a half when we were talking about this. For some reason, it's coming. So, pre-COVID times, you had maintained that India never had, it lacked powerful local brands. Although India is a very large market, right? Now, has COVID fast-tracked your investment thesis? And, with massive brute force, that brands that invoke trust, that invoke hygiene, immunity, especially in, everyday consumption, they become very, very successful, right? All right, I'll stop sharing. Someone needs to do something about this, Shweta, because it just keeps popping up. Right, so one example is Licious. We buy, meat from Licious, for example. And related to this is, look, maybe that's true for the time being, and COVID will go away. I mean, we don't expect it to be stationary for a long time. Now, this behavioral trend of trust in brand, will it continue to create stronger brand as we go forward, even beyond COVID times? So both the questions, to you.
Sure. So maybe I can dial back a little bit, Alok, and answer it more holistically. And I will address the COVID point, obviously, as a part of that. So see, what has happened is that if you look at traditionally, why are there so few brands which have, local brands, or even just the proliferation of brands in India has been relatively low? Because the construct or the whole ability to build brands in India was predicated on 2 big factors, right? One was that you needed to have very high quality of distribution. So India is, again, a known fact, more than 90% is mom and pop stores, small towns, very complex execution. So, for any small startup to come out and start building a distribution, mom and pop distribution business was one major barrier to being successful. And, companies like ITC, Unilever, all these big players, Colgate, etc., have obviously been the, stalwarts and the front runners of establishing that. Second issue was that because the distribution complexity was there, the choices of media and how you engage with the consumer also then became much more mass or much more, generic. So you could go on television, you could go on press, you could go on some local, outdoor and, those kind of radio, etc. But it was a very, one brush paint all kind of story. And that itself is a big inhibitor to the ability to have lots and lots of brands. So at best, you have either large multinationals or you have very large families, the Tatas, the Birlas, and every place you have, who had the capacity and the wherewithal to get into consumer brands and be able to invest and the patience to 10 years, 20 years to build brands. What really, and that was the the 1.0 or whatever you want to call it, the modus operandi of how brands were built. And all of us who grew up in the systems of Levers and Nestle and Procter and others, all of us learned that game, right? I mean, how do you address that Kavita of Kanpur as your, core customer, and what do you offer her? So that those are the, narratives. When 20 years ago I was marketing manager in Levers. What really changed in the last 10 years and very rapidly in the last 5-7 years was two things. One is that with, overall consumers, the trend both in terms of age profile, we all know, millennials, and India is a very young economy, and their exposure to global trends, their exposure to what was happening internationally, they almost became a strong pull factor for this, particularly this younger generation, who were demanding almost new brands. They were demanding new choices. They were not enough availability which satisfied them, and they were in a way, not enamored by what was out there. I mean, they were willing to experiment. So there was a very strong consumer pull, which kept increasing over time. And then the whole digital infrastructure, whether you take the e-commerce players, the Amazon, Big Basket, Flipkart, or you take the media channel like Facebook, Google, Instagram, etc. They started giving you opportunity to actually reach out to consumers, to be far more targeted, to be far more efficient, and through the digital channels to be able to reach these consumers in a more effective way. So suddenly you took away both the barriers, which was distribution and mass advertising, and you brought in a new paradigm to a consumer who was anyway looking for more choices. So that's really the start of this thing. So I would say this is not a COVID phenomena. This is, almost like the last decade phenomena, but accelerating almost as we speak. What COVID has done, however, is it has almost, like you called it, brute forced the adoption of this construct significantly forward. The first underlying benefit to the entire industry was around people's comfort with digital transactions. So everybody is scared of, physical contact, going out to stores. And obviously, all of us have our own, concerns about hygiene and stuff like that. So first of all, people are now, first were almost forced to buy digitally through e-commerce channel, through local, like everything became, digital. Doesn't have to be Amazon Big Basket, which obviously gained a lot from that. But also even the local retailers started providing some opportunity now with the geo, story unfolding, etc., etc. So that was one big thing: digital payments, digital transactions. The second thing which also happened is the question you just asked. People started getting very conscious of what they were putting in their mouths, what they were applying on their body. So suddenly hygiene, the whole aspect of trust became important. So what we have seen is that not just our brands or the digital first brands as we call them, but overall the branded market is seeing a resurgence. Certainly in the category of what you would call essentials. So that is the second, underlying thematic opportunity. So yes, COVID has helped in almost, pushing the boundaries harder. What we used to call, white spaces, we used to call a very selective, 30, 40, 50 million consumers who would consume our kind of brands. Suddenly that number could be 100, 200 million because it's becoming more mainstream. So those are the two, I would say, aspects which certainly have longer legs than just, the COVID times. So there will obviously be some kind of a balance. People will go back to malls. People will go back to all kinds of experiences in various channels. But this one kick, and I read somewhere that there has been almost a 11-point growth of penetration of e-commerce in the US, which is already a highly penetrated market, just because this is almost like the default. So that would be my kind of high level answer on why we feel that this concept of consumer brands is here to stay, and especially companies which are targeting millennial consumers, digital first mindsets. Not to say that they don't sell offline, not to say that it has to be only online first or only an online business. But it's really about the DNA of the business, which is very different from, say, traditional brand marketeers.
And just one additional 2-minute answer, if you can give me. So, I think the viewers know that you've got some of the finest brands like Licious, like ID, like Paperboat. Now, so the question is, can such a brand be created once again? You've created it in 2-3 years, maybe. And these are very powerful brands which you have invested in. They're all your brands.
Okay. So, sure, Alok. So interesting, almost like I'm turning it on its head. These 3 brands are actually my personal investments, an idea I had done from Helion. So actually, these are not even my fund investments.
Oh my.
So the point I was making is that, this is...
You're a rich man, personally.
So the point I was making was that, the construct of what all the names you mentioned, Licious, Paperboat, ID, they have all come out with very exciting ideas for this new generation of consumers. Who would have thought, supplying fresh meat to the home in 90 minutes and it's a $10 billion market. But look at the impact of, not only the growth of the business, which was very phenomenal before COVID, they have grown 3 times after COVID. Wow. And the reason is simple. All of us who are, meat lovers who buy fresh meat, and all of us know fresh meat is obviously, the gold standard for thing. The proposition of Licious was always very strong. We will give you hygienic, trusted, 90-minute delivery in a temperature controlled condition, the best meat that you can buy at a very, very attractive price. So it's not cheaper than market. It's probably 20% higher, but the convenience and the confidence and the trust that you are providing made it a big success. But today, no one is going to go to the local butchery or the local meat shop to buy meat. So that is the extreme example of how a business has grown significantly because of that. So that is one part of it. Now to answer your question, we have brands like Boat, which is a audio speakers brand. That's probably in fact, the recent survey by IDC and a couple of other industry bodies have created a new category called hearables, which is basically audio equipment. And they are actually market leaders. They compete with everyone from JBL, Sony, Sennheiser, Bose, and all the other local brands. And they are #1 player in the market. So the confidence that you can actually build a digital first brand, and that brand can be hundreds of crores. I can't share actual numbers, but it's in large hundreds of crores. That I can share with you as a business. We have a company called Mamaearth, which is in the personal care and beauty space, again, doing extremely well. So I think the next wave of brands which have adopted this concept of digital first, of engaging consumers, and there are a lot of learnings, and our whole excitement is that this is the start of the journey. Next 10, 20, 30 years, it's going to be hundreds, if not thousands of new brands that will come in. And that's what makes us very, yes, we already have about half a dozen brands in our portfolio, which compete or not compete, but certainly, vie for the same attention that the names you mentioned, which are already obviously very successful.
Epigamia, for example, I know.
As well, yeah.
I'd also love to know more about, I think you told us an interesting story about Sarva also. That was quite interesting to see the rise in the health trend.
Yes, yes. So I think so let me, put a little bit of, a framework or a Gyan hat on the whole journey, just for everyone's interest. So what we call, this first wave of these new age millennial brands were actually, Alok called it out, Paperboat, Epigamia, ID, where the narrative was exciting new ideas. Paperboat, very interesting ethnic juices, Epigamia, Greek yogurt, beautifully packaged, beautifully presented for the millennial consumer. ID Fresh, converting consumers from making idli dosa batter at home, etc., into a ready-to-cook space. So, but their business models continue to be, or largely continue to be, similar to what the earlier brands were, which is more physical distribution, more offline, and also, the channels of communication. So it was a transitionary wave, let's say from 2010 to 2015, which these brands represented. Then the second wave is what we are investing in from Fireside. So brands like Boat, brands like Mama Earth, Yoga Bar, Kapiva, Vadam, all of these brands, who have built this digital first DNA. And when I say DNA, what it means is, how do you address consumer insights? How do you address, experimenting with what will work, what will not work? The whole launch fast, fail fast philosophy. So there are many new learnings, which, in the levers world, you will spend 2 years to launch a new brand. Then you will, it better it because you have put all your money focus into it. Here, companies are launching new products, new categories, almost like a churn. I mean, Boat launches, I think, 30 SKUs every quarter. And, fortunately, a lot of them don't work. They're very comfortable, just, so supply chain, lean supply chain, sourcing, all of that. That is the brands 2.0. First, you're engaging consumers, the understanding of things like, performance marketing, now marketing is all about, what is your CACs and what is your conversion ratios and what are your ROAS and all of those terms. The third wave, which is coming, which is very early today, is really what you call the Sarva story. And I'll happy to talk about that as well, which is, companies which are combining content, community, commerce as a thematic way forward. And interestingly, these are also digital first, but their narratives are very different. Can you create personalization? Can you create something? Today, there are companies, in fact, L'Oreal is a great example. They have a company called Modiface in Canada, which can actually, you can take a picture of your face and on the phone, and using some very deep technology, they are able to diagnose your skin type and what kind of skin issues you may have and give you a recommendation for a product that you should use. So that is extreme personalization. And it's catching up in every category. So that is what we feel is the next 5-10 years of journey. We are talking about personalized supplements, we're talking about personalized beauty, we're talking of personalized, experiences like fitness and education, health, etc., etc. So Sarva is an interesting case study because this is started out as a chain of yoga studios. And we invested in them. The whole belief was that, it will be a combination of studios in various cities. And obviously yoga is picking up as a big thing. But the ambition was always that this will be a global business, which will be eventually transformed more and more into a digital business. And in a sense, it would be a combination of, if I may use some big global names, on one side, the calm, the headspace, which are all about meditation, sleep, etc. And on the other side, the fitness side of it with pelotons and some of these things. Now, what happened is COVID came, lockdown happened, all studios shut down. So business became zero. So we had to almost, brute force the digital piece. So in 3 months' time, they have completely revamped the business model. So today they have, deep content. They have put on a lot of effort in creating, you can, do 25 types of yoga using their app. There are live classes. I have subscribed and I'm loving that experience for a pure Zoom-based yoga class 3 times a week. They have sleep content, they have meditation content, mindfulness. So suddenly and now it doesn't matter which city or which country you are in. So they have now customers who are joining in. So now they have to engineer their business model so that their trainers, if it's a live class, are available 24/7, because you have classes happening at midnight for the US audience and so on and so forth. So that's another interesting trend. And if you extrapolate that, obviously we don't do too much of ed tech, but that's another, booming space, because, learning is going online, and there are lots and lots of models that are appearing. So is healthcare. Telehealth, none of us would have ever thought that we will consult a doctor digitally. Today, it's a norm. I mean, you feel a little bit cough in the throat. You say, okay, let me talk to somebody. So companies like M-Fine and WellDoc and others have suddenly seen, 3, 4, 5x growth in their business. So that's the next big thing which is happening, which is, you're talking about content, you're talking about, so Sarva is a great example that it's content-driven commerce. So people come to you for content and they do it. And both Calm and Headspace are billion-dollar companies today, and growing significantly. So that's the journey that we are seeing. But the interesting thing is the journey is getting collapsed faster and faster. So what took Paperboat 10 years probably took Epigamia 6-7 years, has taken Licious 4 years, and has taken Mama 3 years to reach the same number of revenues and traction, and at lower and lower investment cost. So it's a very virtuous situation. I mean, that's what our excitement is, that we have brands getting built faster and with much lesser capital than what even we had imagined when we started out.
Very interesting.
Great. So I mean, this is the sexy part of whatever you were doing. I have a very basic question, which is to do with the DNA of your investment thesis. The basis of investment. Remember, you had not seen so far in future 5-7 years ago, right? But this is a thesis which has built, and it has proven you correct, right? And your approach has always been growth plus profit, right? You've always said the mindset has been unit economics must be high in doing a business, and discounting is an artificial prop. I remember you told me this when we were talking. But yet companies do need repeat buys, right? So the online market is replete with a lot of competition, right? And they need repeat buyers. What is your secret sauce for success? I mean, and this is going into the basis of your investment, the thesis of your investment.
So actually, Alok, the answer is a little bit, I would say divergent from, and I'll talk about all these aspects. I think my biggest learning for the last 20 years is bet on the jockey before the horse. So, if you see, almost 95% of successes that we have seen, I could have, almost said that this is the founder or this is the entrepreneur who will figure it out. And there have been some surprises to the extent of the thing. So again, there is no pattern to this. I'll give you my 2 favorite examples. Neeraj from Paperboat, he was 10 years with Coke, went to Wharton, did an MBA. He actually came to me at Helion as a summer intern. And he was always very clear, after I come back, I'm going to start a company. So it was almost like, one of those situations where, you knew the guy, he came back. By the way, he started a company called, the brand was called Zynga, which was an energy drink. And it didn't work. And, then obviously Paperboat became the big success. Now, if you think of that, it was really his, foresight, his vision, and his entrepreneurial instinct that I was backing. I wrote a check when there was no business. And like I said, this is a personal investment, so it was a small check. But his background is, deeply rooted in beverages, Coke, he's got all the right credentials. Let me take a completely contrarian example of Licious. Licious today, if I may, is actually a larger business, more highly valued than Paperboat in less than half the time it took Paperboat to build it out. Started by my ex-finance controller at Helion, who came completely without any consumer background, and Abhay, who's the other co-founder, who was CEO of an insurance broking company. Only thing common between them was passion for food. They loved their meat, and their belief that, as consumers, they were missing that, one almost like a gap in the market where they said, listen, if I want good quality meat, I want somebody to just deliver it to me. And once again, in fact, this was a funny one because Vivek used to work with me at Helion, and both of us left the same day. And he says, Kanwal, I'm starting this company, and मैंने आपका लिख लिया है. So it wasn't an investment decision. It was like, please write a check for me. And, that's been a wonderful journey. So I would say the big insight for me is back good entrepreneurs. And even if they'll iterate a few times, they'll figure it out. Second thing is you have to be very confident about the market, about the opportunity. So we look for, big spaces which are to be, can be disrupted. And, I saw one flash question on that. What made you invest in Licious? These were just these two things. There is a market which can be disrupted. Now, there are so many execution challenges. So our, risk appetite has to be very high. So, I would not advise, people come to me and say, there's this interesting company. Shall I just put a small check into that? That's not the way to do it. You have to, it has to be as deep rooted, and you have to have a ability to, build a portfolio, because you will not get 10 on 10 success. So I think the key question for us is, one, is it a large market? And B, is this the team that will build the thing? And then the third question you asked is there a viable, profitable business model in this business? And that's where unit economics becomes very interesting. We firmly believe that today's consumer, if you can build the engagement, build the love, build the value proposition, is willing to pay the price for the value you're offering. So none of our companies are playing the discounted game. I mentioned Boat. Boat is in a what people call commodity space. Headsets, earphones, etc. And they are very sharply priced, but they are not the cheapest in the market. You go to Amazon, you will find that the love they get from consumers is in the ratings of 4.4 and 4.5. That company has been EBITDA positive from day one. Today they deliver 10% EBITDA on a very large business base. I mean, they generate a lot of cash. So what we don't look for is saying that you will never lose money. You will have to burn cash because you are hiring people and you are investing in marketing and infrastructure. But what is the end game and how that will be achieved is really the most important, criteria for us. So as long as you've got these three things in your head, great founding team, and you go wrong, all of us go wrong. Market which can build large market opportunities, and there are spaces to do that. And is there inherent profitability in the business? And how does that work? So if you can feel comfortable about that. Second thing we learned, which is very true for our business, and we are very fortunate that it is true for our business, that like I said earlier, you don't need to write very large checks from day one. So we are very deliberate and we write small checks to start with. Even though, we have a large fund, we can, obviously invest more money, but we are saying, listen, the first journey from 0 to 10 crores is very different than 10 to 50 crores, which is very different from 50 to 200 crores. And each of them has building blocks which you need to provide for. And each of them require, therefore, certain effort, certain money, certain resources. And we are seeing this journey. We have 25 investments now in our portfolio. So we have seen it again and again and again. And therefore, no point in raising, more money today to buy sales. So that point you are asking about, we don't believe that buying sales is useful, especially if you don't even have established repeat buying metrics. So, a lot of large players have developed this thesis that if my confidence is that if I can get you to try, I'm so sure you will buy, then I don't mind giving you special offers. I don't mind giving you all kinds of trial, opportunities. But I have to believe that there is data to prove that repeat is happening. If that is not happening, if I have to continuously acquire consumers, I will never make money. So I think, I'm kind of summarizing a very large topic into a very short, time, but that's the, mool mantra, if I can call it that. Yeah.
As a matter of fact, I think a lot of questions have been answered. I mean, a lot of people had the same question. What do you look for when you're actually making an investment decision? I think that's already been answered. I think I'm going to curtail my last question because we have maybe 15, 20 minutes left. and I'm going to jump into questions which we've got from the audiences. So I think Avinash has asked a question saying, is the current time the right time to actually start something if you really believe in it, even if it means quitting your cushy job for it?
It's a tough call. It's a tough call. I think the way I would explain it is, if you passionately believe that there is an idea which is exciting and you're willing to, take the time to build it out, to flesh it out, and not necessarily, have to take VC funding as the only way. So to be very honest and fair, VC funding is slow. People are being more deliberate. They are trying to be much more, thoughtful about writing big checks. So even though we keep hearing these big names of Byju's and Unacademy and all that, the actual activity is still relatively slow. On the flip side, the good news is that because of this situation, there are certain, orthogonal opportunities that are opening up. So, people are today, very concerned about hygiene, very concerned about immunity, about nutrition. The work from home opportunity has opened up all these new categories. Why people like Boat are doing well is because, suddenly you're working from home, you need better audio sets, your kids are learning from home, you need some better infrastructure, you're watching a lot more of content through these OTT channels, you need better audio equipment. So suddenly, you start seeing the pattern. So yes, if you have an interesting idea and you passionately believe in it, I think it's a fantastic time to start putting it together, because, you are not under the gun to say in 3 months, I have to get it out. But it is a tough time because, funding will not be that easy. So you have to believe that you have to manage your own, journey for the next 6 to 12 months before, and if you can build a successful prototype or an interesting model, the funding is certainly available. I mean, just to answer from a very personal experience, my daughter, who's in the climate change space in the US, she just quit her job last week and she's turning entrepreneur. So there is an inspiration there for us.
All in the family. There is a slight counter question. I think I know the answer for this, but I'm yet going to hear it because someone has asked this. Would you invest in a startup where the founders still have another job and have yet not quit and gone full time into it? That's Anurag. I know the answer, but I want to hear from you.
No, I don't think so. I mean, I have done it before. I have learned from my mistakes. I think the real test of entrepreneurship is really your willingness to take the plunge and be willing to bootstrap it. And I'll tell you what the issue is. Again, this is a very, generic answer saying yes or no. But what happens is that your commitment to what you're trying to do is measured by the risk you're taking. So in a way, if you are still saying, listen, and I have unfortunately seen that with more senior executives, people who have been in the industry 15, 20, 25 years, who have big obligations, who have large, family, EMIs, all of those things. They are the ones who ask this question. No young entrepreneur has ever asked this question saying, can you fund me while I'm still in my job? And I can understand because, all of us have, certain requirements for our whatever, managing our own expenses. But what really happens is that I'll give you a very orthogonal thought here. My learning, and again, without naming names, of having done this at least 4 to 5 times, of backing very big brand name senior executives who knew it all. 2 things happened. One was that they wanted to build a rocket ship before they could even build the foundations. And that is the negative of giving a large check, because what happens is not only does a senior executive want money before he quits his job, he also wants a larger check than normal because, he's bringing in this big stride. And I have actually seen that becoming the reverse spiral of saying, we will overinvest in hiring all the senior people on day one. We will, have fancy offices. I need a secretary. So, again, I'm being a little frivolous here, but the bottom line is that, that hunger, that passion, that, almost, this is my life and I have to make it work. That has to be demonstrated. So even if your product is still not fully in the market, Mama, Vicious, Paperboat, all these companies I invested before product in market. but the hunger, the passion, and the vision, and that is really what gave us the confidence that these are really interesting or very exciting entrepreneurs to back.
I think that answers again a series of other questions that have kind of come from audiences. I think one question which almost everyone seems to be, but especially by looking at your portfolio, is if you look at the future, is D2C the way to go for niche consumer brands? Or is there some part of the old world still hanging around?
There is, see, it's a complex grid out there, right? So there is no one answer. Overall, e-commerce penetration is still low single digits. Even if it doubles, it is still in that realm. So therefore, can you have business ideas which can be large businesses using more traditional offline things? Of course. But the entire, the construct and the business model of that is very different. And those could be even larger businesses. But, you need, like, let me take a live example. There are two companies who have recently, built large businesses with a very offline focus. One is Bira, which is a beer brand, Bira 91. They have spent, I think, from 500 crores to build a large business. Now, that's a legitimate answer, and that's a legitimate way of doing it. Now, you can build a large brand. Too Yum, which came from the RPG Sanjeev Goenka group, same thing, right? They invested heavily in distribution and signing up people like Virat Kohli, getting a great product and all that. So that playbook continues. Is it a startup idea, or can startups do it? Possibly, but it's going to be much tougher because you need a lot of capital, you need a lot of execution. So at least for us, that is not our thesis. That's the best way I can explain it. Can D2C be the only way to do it? We believe that there is a lot of headroom for new brands to get built using digital first as the thesis. And once again, I repeat, the DNA of the business is digital first. How do I talk to the consumer? How do I build the trust? How do I engage with you? That we believe has to be more digital. The channel choice, whether it is my own site, which is truly what we call D2C, or it is e-commerce, which is the Nykaa and the Amazon and the Flipkart and Big Baskets, or it is selective offline channels which provide me the ability to expand. That is very much a choice that a brand has to make, and that is a decision or a conversation we have with our companies on a very constant everyday basis. So it's not that all our companies are only online first. I mean, Yoga Bar, Kapiva, these two for sure. Mamaearth is mostly online, Boat is mostly online, but we have businesses which have this hybrid construct, and there is nothing right or wrong with that. I think it's a matter of how you are thinking about your brand, how you're thinking about engaging with the consumer, and also the journey of this thing. So, for example, we can always start with a pure, like Boat is a great example. For the first 3 years, they never sold a single item offline. Only Amazon, then Amazon Flipkart, then Amazon Flipkart, Myntra, etc. That was the first journey. They built a 500 crore business just with this. Then they went offline, and you know what? People had so much of awareness, and the brand was already so strong. Today, 15% of their business comes from offline, but that 15% is many crores, hundreds of crores. So again, it's a matter of timing. Now they've launched their own website, and they are seeing a phenomenal, response to that. So it's a matter of timing. It's a matter of choices. So, I mean, obviously there is no one right answer. But we are more digital first. I mean, that's the way I would put it.
Two questions, they're interlinked. One is, and one is very broad. So, it talks about how do you generate ideas? I mean, that's one of the questions that comes in. Can you throw some light on new idea generation? I think that's a very broad question. I don't know whether you want to answer that or we just a couple of things. But the more important part, when there is a startup at a nascent stage, that is, how do you figure out that will show promise in future? I think you've already answered part of it, like the horse that it's not the horse that you bet, it's the jockey. You're looking at the market, and I think you've given this answer. But if it is absolute nascent, would you invest versus no POC done, nothing done? I think those are the two questions that you can give us some view. lot of time, a lot of these questions are coming to us.
Yeah, sure. So just repeat the first one. I lost the thread.
The first one was generation of ideas. I mean, I think there are a lot of people who are smitten by the success, and you know, you are a catalyst for that success.
Sure,
so
sure.
they're asking you, is there a way to generate ideas which can help them come to you?
Sure, sure. So, you know, the answer is again not a simple one. We have now a reasonably large team. We have people who are looking at sectors. So we have identified broadly what our play field is, right? We said consumer brand. Within consumer brand, there are certain sections and certain spaces that we are excited about. And that keeps getting revised. Now with COVID, obviously, some of the things I mentioned earlier are obviously hot themes for us. So we have a top-down approach where we have people in our team who will research sectors, who will research, you know, trends, who will see what is happening globally, who will see what is happening in India. Then they will scope out what kind of companies. So it's really, you know, a lot of, I would say, research-based thesis formation. But the real interesting learning for us is that we learn more from entrepreneurs who have come up with interesting ideas. Because at the end of the day, you know, we are not the custodians of the idea. Then I would even argue that, you know, an entrepreneur who has found a passionate idea and he or she believes in it is actually a far more, you know, interesting thing than us going around and looking for, you know, what is the best thing. So it's a top down and a bottom up. If I say the companies that we have invested in the fund so far, I would split it more like 65-70 is more incoming ideas that we evaluate almost as standalone. Then of course, then you put the hat of the sector on it, then you put the hat of the market on it. But it always starts from, you know, meeting an interesting entrepreneur in an interesting space with some twist or some disruption that they are doing it. So there is no, you know, one word answer for how do you generate ideas. I would say that, you know, there is enough and more data out there, you know, the McKinsey and the Bains, they're publishing weekly reports on trends and all that. So analyzing those trends is important. But what comes to you as an individual and what you feel passionate about is really, you know, whether it's Vadam, whether it's Mama Earth, whether it's Dishes, whether it's Paperboat, whether it's Yoga Bar. I mean, I can name it on my fingers. All these companies got started by people who strongly believe in something in that idea which they related to. And I think that is to me the most, so it can't be, you know, pardon if any McKinsey guy is there, it can't be a McKinsey framework to say, you know, where should I launch a business? It should be saying, listen, what do I feel passionate about? And, you know, then of course you have to put the hat of all the, you know, the goods and the question marks, and the SWOT analysis as we call it. And so there is a consulting framework that can work, but not to replace passion. And the second one I have already answered. So,
so we have a very specific question, I think, comes from Ankur Malik. We've now opened up the Q&As, which people are asking live. We are a startup and a job marketplace and a gig service aggregator. Consumers also love our service, but there are much bigger and VC funded players. How does one compete against such big brands?
Fantastic question.
See, again, you know, is it a cookie cutter solution, or is it something that you can show with a very strong differentiation? So, you know, we are mostly investing in consumer brands, which is not a winner take all. Some of the service plays, some of these, you know, aggregation plays do tend to have a very strong bias towards, you know, one or two big players taking that market. In fact, there I saw some flash questions. You know, the key difference between my Helion learning and my Fireside learning is that, you know, when you are operating in network effect businesses, when you are trying to build, you know, this very large network businesses, then you also need to have very deep pockets. So I really don't know that space well enough, but to me, the tenets will not change from what we do. You know, what is your offering? What is the value proposition? Is there a particular consumer segment or a customer segment that finds you more valuable than anybody else? Because the advantage for you will be that the big boys will always try to be the one shoe fit all, because that's their business. So can you create, you know, interesting example from a related field, say e-commerce. You know, Nykaa came at a time when everybody thought Amazon and Flipkart are going to kill every vertical player. But they created a very different value proposition. Then you have First Cry, again, targeting just the baby space. You have Lenscraft. So that's a great way to, understand how you can create a proposition which may be more restrictive in terms of the customer audience or in terms of the consumers who could be your target consumers, but you give them something so unique, so deep that the bigger boys are not able to do it. And then you build on that as a building block. Today you target one type of customer cluster, then you target another type of customer cluster. So that's the only way for these kind of things to survive in, when the big boys which are very highly funded, are competing.
Correct. I think we have space for one last question. Alok, you want to take a crack at that?
Yeah, I was just going to tell we've struck the hour and probably running out of time. So what is more important in the next 12 and 36 months? Preparing for higher valuation or preparing for probability? So there are two parts. One is 12 months and the other one is 36 months. Rahul has asked this question.
Higher valuation versus profitability.
Yeah.
I have a simple answer. There is no such thing as preparing for higher valuation.
You need to have money.
See, for me, one of the biggest learnings is valuation should follow value. And I have seen examples, and all of us have seen examples where companies have got valued way, way beyond their actual real intrinsic business value, and then crashed from 0 to 100 and 100 to 0. So at least to me, preparing for value is the only answer. Now that value becomes then more interesting, is the value in larger customer base, is the value in the metrics of various, whatever consumer insights that you are trying to gather, or the value is in showing a path to profitability. So the definition of value can be much more complex and what it means. But if you can keep creating value, I think valuation has to follow. And we are seeing companies, who have been able to demonstrate. Now there are dozens of companies which are now showing that you can create value. And today, the interest in our space from every large venture capital firm who are typically tech investors has heightened because they've started believing that you can create a path to profitability or a profitable business. You can create it with lesser capital and you can create large business. You see, earlier we were seen as a niche, at best 100 crores, so a lot of big VCs used to tell me, we need to see at least a $500 million valuation. Now you have companies which are hitting those kind of numbers. And, soon we will have some unicorns. But the idea is not that unicorn is the end objective. Idea is, can you create the foundation which can be, worth $1 billion? At least that's my belief. I may be very contrarian to everybody else out there.
Super, super.
Thank you. I think, Sangram, this has been a fantastic 1 hour, Kanwal. And normally we never summarize because, the stature of the guests that normally bring in, it's the view from the absolute top. And so this 1 hour is so much packed that it's impossible to summarize, but we do have a call to action. And I think your call to action is create the value, forget about everything else. If I get it right, just focus on the value, everything else will follow. And that is a beautiful call to action that you've given to everyone whoever who's listening. If you have any last words, please go ahead. But we've really enjoyed this hour.
No, see, I have lived in the world of entrepreneurs for the last 20 years, and I joke with, of course, with all my entrepreneurs, but now with my kids, is saying what I couldn't do myself is turn entrepreneur. I'm living vicariously through all of you. So, for me, the most important aspect of being an entrepreneur is enjoying the journey as much as the end outcome. So, that passion, that belief in what you're doing, that willingness to, somebody asks, can you check up your job and, take the risk? All of that is driven by something that you feel in your gut, in your stomach. And, that passion to do it, that junoon, as an interesting word to correlate to. If you really get that feeling, then I think you are ready for an entrepreneur journey. And VCs will come and go. Don't need to necessarily raise funding. And now we are seeing more and more examples of very successful businesses who are no VC funding. So I think all of that will unfold, but the opportunity in India is so immense. So we are sitting on a very strange situation. We have 1 billion plus consumers. We don't have enough brands. We have millennials who are asking for more. And there is not enough capacity for the big boys to fulfill that. So the gaps in the market are phenomenally exciting. We are not even talked about Bharat. We are talking about still the top 100 million. We have not even talked about international. I have 2 companies over 100 crores revenue each, selling only internationally. One is a tea company, one is an Ayurveda-based skincare company, only digital, only online, 150 crore brands, only selling in global markets. So I'm saying the opportunity is so large that I would say, I love everyone who turns entrepreneur. So that would be my, kind of final word saying, if you believe in something, do it.
Thank you, Kanwal. Highly inspiring. I'm sure everyone would have loved it.
Yeah. No, I think too many lessons to learn. I guess starting from the way you beautifully categorize the 3 generations, so to say, of consumer brands, starting right from the Paperboat example at one side to Sarva, and I guess post-COVID the opportunity of community and commerce coming together. And I guess a lot of these micro stories that we are also discovering through our other COVID tales are pointing out to these newfound directions that you gave, right from the opportunities in hygiene to nutrition to work from home. And those are the new forums that are opening up. Commerce, I think we had a lot of learning coming in this session. I think the most important thing that you said in the end is that valuation will always follow as long as there is value. And I guess the recorded part of this interview will be up. I'm sure it's worthwhile viewing for so many of my friends who asked me questions and I said, just tune into this session. All of them will find a great value in going to YouTube, seeing the recorded links, possibly seeing this over and over again because there's so much of learning packed over there.
Absolutely.
So thank you very much, Kanwal, for spending 1 hour really, packing us with insights. And we are very, very happy to welcome all of you guys who have spared your Saturday and listening to all of us here. And next Saturday, again, we continue the journey. We have yet another interesting journey for entrepreneurs. We have Sameer Sathe from Vadhwani Foundation. And he'll be mentoring entrepreneurs on several other aspects which were not discussed today. We spoke more on the marketing and the opportunity side. But when it comes to actually running the organization, taking critical decisions of leadership, layoffs, managing costs, those are the areas that Sameer will be speaking on. Also, do follow us on COVID Tales. Look out for the micro stories. And as I said earlier, the recorded links are up. With that, thank you once again. And it's a goodbye from here on this Saturday.
So that's from our side or from Guts, Glory and Story. Have a great weekend. And Kanwal, thank you very much once again. Thanks for our viewers too.
Thank you, everyone. Be safe.
Thank you. You too.